Good morning. Happy Wednesday, everyone. Welcome to today's episode of Morning Wealth. Three things that you can look to here: change in Japan's sovereign outlook, Europe joins the Trillionaires Club, and what to look forward to from the FOMC. Wall Street traded mostly in the red on Tuesday, but Nasdaq eked out a gain and booked a new record as reopening efforts continued in the US. Fresh peaks from Amazon and Apple helped drive the Nasdaq Composite to 1 point beyond the 10,000 points for the first time. WTI crude prices closed higher as declines in output from leading producers outweighed the renewed demand concerns. On the virus front, Dr. Fauci offered a grim outlook, warning that the pandemic is far from over. Over the past week, daily cases increased 3% after declining 5% in the previous 7 days, triggering concerns of rising numbers in Florida, Texas, and California. Dow Jones lost about 1.1%, S&P 500 was down about 0.8%, but in contrast, Nasdaq gained about 29 points to a new record high. Most sectors in the S&P 500 lost ground. Communication services and technology groups edged higher. Shares of small companies, which are considered sensitive to the strength of the economy, halted their recent rally with the Russell 2000 sliding by about 1.9%. Japan's sovereign outlook was revised down to stable from positive by S&P, which basically said that large deficits will keep upward pressure on the debt to GDP ratio until fiscal 2023. On the equity side, in a key step towards keeping its sale to LVMH on course, Tiffany persuaded lenders to grant more financial flexibility, including temporarily raising the limit on the US jewelers' debt to earnings ratio. So any breach of the covenants might have given the French luxury giant a loophole to alter or back away from the purchase. Also, what is helping Tiffany is that its business in China is bouncing back strong. Mainland retail sales rose 90% on a month-on-month basis in May. Apple is preparing to go public about a shift of using its own main processors in Mac computers, replacing away from Intel. On the fixed income side, Europe joined the Trillionaires Club. Bond sales broke through €1 trillion threshold for the year at the fastest pace ever amid funding conditions that have favored borrowers. The region's syndicated bond market had its busiest day ever, with 21 deals raising about 41.6 billion euros to bring the total to about 1.01 trillion euros. On the Forex side, FOMC is all that we are going to look out for today. The US dollar will be in focus, but there's very little consistency in the performance of the US dollar yesterday. The greenback traded lower against the Japanese yen and Swiss franc, but moved higher against other major currencies. So based on the price action, investors do not expect much from the Fed. They are not expecting them to change interest rates or increase the quantitative easing, but FOMC should still be a big mover for both equities and currencies. Three things that we should watch out for is one, the interest rate dot plot. The last time the dot plot was released was in December because March meeting was cancelled. At that time, policymakers expected interest rates to remain unchanged until 2021. However, the big question is, how long do policymakers expect rates to remain at new lows? There is no doubt that it will be throughout 2021, but they may not look for rates to increase until the end of 2022. The longer the duration to tightening, the more negative the impact on bond yields and the US dollar. The second thing that we can look forward to is economic projections. It's also been 6 months since the Fed's last economic projections were released. Their projections for 2020 growth will be an ugly number, but investors are prepared for that. But they'll be focused on how long before a meaningful recovery. The US economy is on the road to recovery, but it will take 9 to 12 months, or will it take 2 to 3 years? The faster the recovery, the better the US dollar. So getting some understanding on this will also be key. The third and the last thing is Powell's outlook and guidance. Right, the Fed chair's outlook and guidance is important. There's no question that the policy will remain accommodative for the foreseeable future and the door will remain open for more easing. However, will Powell believe that the worst case scenario has been avoided, like counterparts in other parts, like his counterparts in other parts of the world have signaled? So these are the things that we have to look forward to on the from the FOMC. Have a wonderful day and speak soon. Thanks.